The S&P 500 fell 0.3% this week. The Nasdaq barely moved. Sounds calm, right? It was anything but calm. On Tuesday, the Dow dropped 870 points, its worst day since October. By Friday, markets recovered most of the loss. What happened in between tells you everything about where we are in 2026. Hey, if we haven't met yet, I'm Burke's AI avatar. I make financial content for free, so you don't have to pay. Burke is David Berkowitz, the principal at VAP Wealth Advisors. He trained me using 40 years of personal experience as a hedge fund trader, stock analyst, portfolio manager, and corporate finance consultant. You get all that knowledge while he works one-on-one with families. He reads every comment and writes all my content. Now back to the video. Let's start with what triggered Tuesday's crash, the Greenland situation. Monday and Tuesday, tensions escalated fast. Demands for Greenland acquisition combined with threats of 10% tariffs on 8 NATO allies. Denmark, Germany, France, the UK, major trading partners. Tuesday, the market panicked. The Sell America trade triggered. Foreign investors fled U.S. assets. The VIX spiked. 870 points gone in a single session. Then Wednesday, a framework deal with NATO was announced. Tariff threats were withdrawn. The relief rally began. But here's what stuck. Gold hit near $5,000 an ounce. Silver passed $100. Historic highs. That signals something deeper than a weekend spat. Systemic distrust in policy stability is now priced into safe haven assets. The takeaway for owners? Geopolitical volatility is tradable risk now. It can move markets 870 points in a day. But for long-term owners of quality businesses, Tuesday's panic created buying opportunities, not selling emergencies. The sector performance this week tells you exactly where money moved during the crisis. Energy led with a 3.1% gain. Oil prices rallied on Middle East tensions and tariff-driven inflation fears. When global uncertainty spikes, energy wins. Materials followed closely. CF Industries, the fertilizer producer, gained 3.5%. Agricultural demand stays strong regardless of diplomatic noise. The losers? Real estate down 2.4%. High rates continue strangling valuations. Financials dropped 2.5%, hurt by higher credit loss provisions. Capital One missed earnings badly. The pattern is clear. Defensive sectors and commodity producers outperformed. Rate-sensitive and trade-exposed sectors lagged. This rotation will continue as long as the Fed stays higher for longer. Now, let's talk about the economic data that's confusing everyone. The economy is accelerating when it was supposed to be cooling. Q3 2025 GDP was revised up to 4.4% from 3.8%. That's remarkable resilience in consumer spending and corporate investment. But inflation remains stuck. Core PCE sits at 2.7 to 2.8% year over year, still above the Fed's 2% target. The labor market stays tight. Initial jobless claims at 200,000. Employers are hoarding workers despite tech layoffs making headlines. This is the no landing scenario. Growth stays high. Inflation stays elevated. Rate cuts get delayed. The market once expected 5 or 6 cuts in 2026. Now it prices fewer than 2. The first cut might not come until July. For investors, this means favoring companies with pricing power and low debt. AutoZone, Ulta Beauty, businesses that can pass costs to customers and don't need cheap financing to grow. The Fed enters its blackout period ahead of next week's January 27 to 28 meeting. The futures market prices a 98% chance they hold rates steady. One political risk to watch. The DOJ launched an investigation into Fed Chair Powell regarding congressional testimony. This injects a dangerous risk of Fed independence into markets. Markets hate uncertainty about central bank autonomy. Powell's press conference on Wednesday will be critical. His language on the 4.4% GDP strength could trigger a higher for longer sell off if he sounds hawkish. Let's get to our value aligned portfolio. A challenging week, but our stock selection created clear winners. AMD, Advanced Micro Devices, surged 12% this week, up 21% year to date. The anti-Intel trade. Intel warned of severe supply failures, dropped 17% in a single week. AMD became the primary beneficiary. Their server CPU capacity is fully booked for the year. That confirms pricing power and AI data center dominance. Interparfums gains nearly 10%. They reported Q4 sales growth of 7%, beating estimates. Strong European demand, a robust 2026 launch calendar, and insider buying added a confidence signal. AutoZone hit a new 52-week high, up 5% for the week. The aging auto fleet thesis remains the most durable story in the consumer discretionary sector. High new car prices force repair over replacement. People fix their old cars instead of buying new ones. Ulta Beauty gained 3.4%. They announced the UAE expansion through the Mall of Emirates via the Al Shaya partnership, a strategic pivot from domestic to global growth. Permian Resources rose 2.6%, lifted by the energy sector rally and a corporate reorganization that aligned management interests with shareholders. Now the headwinds. Broadcom dropped 9%, victim of sentiment contagion from Intel's warnings. Investors worried their custom AI chip business might face margin compression as volume ramps. This appears to be a short-term overreaction. The AI connectivity fundamentals remain strong. We're watching, not selling. Here's the semiconductor story of 2026. AMD up 12%, Broadcom down 9%. Same sector, completely opposite results. The days of buying semis as a monolithic trade are over. Stock selection within sectors matters more than sector selection. Installed building products fell 4%. The higher for longer rate narrative hurt all housing stocks. JP Morgan downgraded them to sell. The long-term housing shortage thesis still stands, but near-term pressure is real. Apple dropped 3%. Worst Mag 7 performer year to date at negative 8.76%. China weakness continues. Regulatory scrutiny persists, but earnings hit January 29. This could be a sell rumor, buy news setup if AI features drive the upgrade cycle. Next week is the most consequential week of Q1, a convergence of macro and micro events that will dictate market direction. Wednesday, the Fed decision, rate hold expected. Powell's press conference matters more than the decision itself. About 20% of the S&P 500 reports earnings. Microsoft, Apple, Alphabet, Tesla. Big tech guidance will dictate whether AI capital spending translates to actual revenue. Economic data, employment cost index, and JOLTS job openings both give clues on wage inflation, key inputs for the Fed's inflation model. Bull case, Fed acknowledges falling inflation. Microsoft and Apple confirm AI spending is generating revenue. NASDAQ breaks resistance at 26,000. Bear case, Powell sounds hawkish on the GDP data. Apple or Microsoft offer tepid guidance similar to Intel's disaster. S&P 500 tests support at 6,800. Three things to carry forward from this week. 1. Geopolitics is a tradable risk. The Sell America reaction was swift and severe. U.S. policy volatility is now a priced factor in global markets. Investors must recognize this reality. 2. The no landing reality. With 4.4% GDP growth, the recession is canceled, but so are imminent rate cuts. Favor companies with low debt and high pricing power. 3. Semiconductor selection is critical. The monolithic buy semi stocks trade is dead. AMD up 12%, Intel down 17%. Owning the wrong chip stock is a liability. Execution matters. As we approach the Fed meeting and big tech earnings, stay disciplined. Don't chase relief rallies. Don't panic sell into headline driven dips. Review your exposure to interest rate sensitive sectors. Make sure you're comfortable with semiconductor volatility in your portfolio. For long term owners, this week's volatility was noise. The signal remains the enduring strength of American corporate innovation. If you're serious about building wealth through direct stock ownership of quality companies, the link for a free consultation is in the description and pinned comment. Questions about anything I covered today? Drop them in the comments. David reads every one. If you found value here, you'll want to see this video